After something of a wild ride in 2018, in this video, we're going to look at what the year ahead could hold in store for the oil price. Hello, I'm David Jones from Capital.com, and as we're still almost at the beginning of the year, we thought we'd take a look at the price of oil and what sort of movements we can expect in the months ahead. Last year, there was seldom a dull moment in the oil price. It had been recovering really strongly for about 3/4 of the year. Then we saw this enormous sell-off into the year end, and it started 2019 pretty much just as volatile with a fairly sharp recovery. So before we get started in looking at the charts, let's just take a look at the numbers first of all. How did oil perform over the longer and medium term through 2018? What does that look like on the chart? And what are some of the big levels and what can we expect potentially for the oil price in the months ahead? So let's take a look at some of the numbers for oil over the last 12 months. So this is from the end of January 2018 to January 2019 first of all. So over that 12-month period, the oil price dropped by almost 17%. But it was really later on in the year it started picking up momentum to the downside. So for the 6 months to January 2019, the price had lost a fifth of its value. In the last 3 months of the year, it fell heavily. So from the end of October 2018 to the end of January 2019, the price had dropped by just over 17%. But things did start to turn, and we have seen something of a strong recovery the other way. So from the end of December, the end of the year 2018 to the end of January, the price had bounced back by almost 18%. So you can see there has been incredible volatility, some massive swings in the oil price through 2018 and into 2019 so far. What were the reasons for the sell-off? Well, we had increased production and supply of oil from major oil producing regions such as the USA and Saudi Arabia. So American oil production hit record highs towards the end of 2018. And clearly it's a simple supply and demand thing here. If we have more oil available in the market, traditionally more supply means that the price comes under pressure. Coupled with that, we had more oil, but there were also concerns about the global economy. For example, the Chinese economy slowing down. You know, if economies slow down, factories are producing less goods get shipped around the world, and the net result is a lower demand for energies such as oil. So we did have maybe something of a perfect storm for the oil price. Increased production just at the point where it looked like demand was starting to die off. So we saw quite the knee-jerk reaction from the oil market and the price under so much pressure. So let's just put that into context. This is a chart of oil, and we've got the lows down here were June 2017, and we did see the price of oil start this recovery from around about $42, $43 a barrel. And by September, October of 2018, that recovery was still going strong. The price had pushed up above $76 a barrel, but it was over the next few months that things really changed. Let's take a look at that. So we can see here, it was towards the end of October that oil finally fell out of that trend, dropping through $67.50 a barrel. And after that, the sell-off really gained momentum. And you can see by the third week of December, it had gone from a high of just shy of $77 in October. 2.5 months later, it was down around the $43 a barrel mark. So a massive turnaround in sentiment for oil that took a little over 10 weeks to give up all of those gains that had been built up over the previous 15, 16 months or so. At the time of recording, we're still a long way below the highs from 2018, but we've had a very decent bounce back over the last, 6 weeks or so. So it's come from about $43 a barrel. It has traded as high so far in February up to about just above $55 a barrel. So we've seen a pretty strong bounce back, and this recovery is still just about going. Let's take a look at it in a bit more depth. So what we're looking at now is a 4-hour chart of the US crude oil price. So each of these candlesticks represents 4 hours worth of trading. You can see that the bulk of the recovery came really in the last couple of weeks, or the last week of December, and the first 2 weeks or so of the new year. The market has tried to push higher, but so far at least we're trading pretty much broadly sideways. I think in the short term at least, the really big level to watch is around about $50 a barrel. So far, that has managed to stop any major sell-offs in the price of oil in this recovery we've been in since the end of 2018. So in the short term, I think that's one to watch. If it breaks below 50, then maybe the risk is we go back to the mid 40s and see how the market performs down here. Do we see buyers coming back in who feel that they may have maybe missed out on this sharp rise at the beginning of 2019? So some big levels to watch, but let's just take one last look at the bigger picture. So I think it's fair to say we've broken out of that trend that had been in place since October of last year. I think the strength that we saw coming into this year finally shook that off. The markets tried breaking through the early December highs around about $55 a barrel. So for now, the recovery is still intact. Perhaps the next target is a run back up towards 60. So the highs from mid-November, $60 a barrel. But the real test will be if we see a deeper sell-off. Do we see $50 continue to hold? If that gets broken, for the recovery to remain valid, we'd want to see buyers coming back in the mid-40s. So perhaps after the excitement of the last few months, we could have maybe somewhat of a quieter trading time for the price of oil, but we've got some key levels to keep an eye on. And I think it's a really interesting market to watch for more potential recovery in 2019. So towards the end of the year, it was this combination of two factors really. It was increased production, particularly from the USA. So we had more supply of oil, and then we had real concerns coming in about the state of the global economy. You'll remember if you watch stock markets, we saw stock markets also fall really heavily in the last 3 months of last year. And those threats are still there. The price of oil has bounced back about 30% from the lows that we saw in December. So we've seen a really sharp rally, but the worries are still out there. We still have concerns about just how strong the world economy is going to be this year. Is China going to suffer from a potential trade war with the US? We have seen cuts by OPEC countries, for example, in oil production, and that has definitely helped lift the price up. Again, it's a supply and demand balance here. So at the moment, at the time of recording, I think that recovery is still intact, and markets do overshoot. So maybe last year towards the end, things got a little bit too negative about the price of oil. That's something that again may also have helped the strong bounce back we've seen this year. Perhaps we're due for a period of quiet trading because we have seen such, for oil, relative massive volatility over recent months. Perhaps we are due a period where everyone gets their head around what's happened, and we see if that $50 a barrel level can hold and whether it can build on the recent gains and start threatening $60 a barrel. So at the moment, I think we are still in the recovery phase. That trend from last year does look to have been broken with the recovery we've had, but maybe we have a little bit back and forth over the next few weeks where we get established at these levels. But I think there's seldom going to be a dull moment for the price of oil. It's another, I think, key market to watch this year. It tends to be one of the most popular markets traded amongst our clients, which is why we run quite regularly during the week. We'll run occasionally a zero spread period for oil. So if you trade it with Capital.com, you get a notification off us, say we might be running a 12-hour period where there's no spread. So make sure you take advantage of that if you're interested in the oil price. Of course, to open up an account, you can go to our website, Capital.com, and open it and have access to the desktop platform, or then of course download the app, open it via the app, and you can access it in all sorts of different ways to stay on top of what's happening with this incredibly important market. We'll start wrapping things up there, but if you have a different view on oil, if you think it's going to maybe 20 or it's going to $100 a barrel this year, we can have the discussion down there in the comments. I do read them all. Any questions, please put those down there as well. If you like the video, click on the thumbs up, and to never miss out on the content we produce, whether it's oil, gold, currencies, cryptocurrencies, live broadcasts, all this sort of stuff, just make sure you're subscribed by clicking the subscribe button down there, and that alarm bell icon. If you click that, you get notified every time we put new content on our channel. But for this sort of slightly more longer term look at oil, we'll start wrapping things up there. So from me, David Jones and Capital.com, good luck with your trading.